Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 4 o'clock in New York. It is Tuesday, July 11th, 2017, and this is the Daily Report for Gold and Silver. We do have marginally higher pricing in gold and pretty dramatically higher pricing in silver. Now for the second day in a row, gold closing up today at $1,215.80. That's a gain of about $2.50 on the day, or 0.2%. Now, it traded to a high today of $1216.90, but it is the low that I do want to focus on as we pull up our technical studies, and that low came in at $1207. Over to silver. Silver closed at $15.80 on the day. Net gain about 18 cents, 17.6 to be exact, but the net gain was well over a full percentage point now for the second day in a row with percent gains. It traded to a low of $15.42 and a high today of $15.82. It really is the low of the last couple of days that I want to focus on. Gold has picked up a little bit of steam, currently up about $3.60 at $1216.80. The key, though, is whether or not these lows are going to hold, because consider this. Over the last couple of trading days, yesterday was the most extreme of those lows, in which the market came to roughly 1204 intraday. And that is really, really close to matching these lows that came in about March. However, these lows actually broke below $1,200 per ounce. But what I find most fascinating, and let's go ahead and kind of blow this chart up, is that on each occasion when we had these lows come in, one, it tells us that sellers really had some power in bidding this market down. Look at the length of the tail. In other words, the distance between the open, which is the lower end of this green rectangle, and the low, and how they bid it back up. This, as I said yesterday, is really a doji. Really, it would be called a rickshaw man, whereas today's candlestick would really be properly classified as a hammer. Reason being is you have little to no upper wick. You do have a lower wick that is 3 times the body size, or 3 times the length of the body size, and the body is continuing to grow as they bid this market up. As I said, currently up about $3.60 or $3.70. Lastly, as we look at this chart, we can make one other technical observation, and that is on yesterday's trading activity, we had a more extreme low. We talked about that. But the market opened and closed below the previous low, which comes in here and came in the first week of May. Today, the market opened just above and closed above that particular low. And so what we want to see is over the next couple of days, whether or not that low at roughly 1213, 1212 actually holds. Because if it does, it would signal a potential conclusion to this extended correction that gold has been in. Now, as far as silver goes, we are seeing a very, very similar formation in terms of the candlesticks, although silver is moving at least 3 to maybe even 4 times the pace in which we are seeing gold move to the upside. Net change today in silver up about 19 cents or 1.25% gain. Let's go ahead and blow this up, and we can see the same kind of a rickshaw man that appeared on our daily charts in gold yesterday. And also, this is getting out of the realm of being a hammer. Today's move, your tail is not quite 3 times the length of the real body now that we've seen an extended move to the upside. As I said, on this next trade, I will look to incorporate silver as well as gold to our mix. For the time being, my recommendation is to remain flat with a neutral stance until we issue our next signal. In other markets that we follow, it has been primarily dollar weakness today that has most affected the precious metals markets. A dollar index 95.53, putting it off about 24 points or about 0.26% on the day. Mixed bag in U.S. equities. Dow Jones Industrial Average, in essence, unchanged today to close at 21,409. Over to the NASDAQ, and that, once again, was the stellar performer of the day. It's kind of like the silver of equities in that it outperforms on days when the market's moving higher in terms of percentage gains, but certainly sells off much more extreme on days when the market is under pressure. But the NASDAQ 6193, a gain of about 0.3%. And then lastly, S&P, I'm going to put that in the unchanged column again at 2425. And traders, in terms of the other markets that we follow, do want to take a closer look at the dollar index today. We are looking at a weekly chart, and you can see that absolutely we have seen the dollar come under pressure for the better part of this week. Want to go ahead and convert that to a daily chart, because what you'll see when we look at it through the eyes of daily candlesticks, and I want to go ahead and compress this a little bit, is that once again we are going into an area in which we are slightly range bound. The upper end is coming in at around 96, with the lower end coming in just shy of 95. We can see that there is some support down here at about 95.25, but I do believe that there is a real potential for the dollar index to slide a little bit further. One of the things that we're looking at is, as this market came down, we did get periods in which we would have extended corrections and rallies, but recently what we've gotten is a market moving sideways and then making some sort of major move up or down. In this case, it had a small clip up and then down, and then again, sideways trading activity and kind of that stair step to the next level. I believe we'll see more of the same. In other words, sideways action and then lower pricing. My target for the dollar index still remains at around 94.50 to 94 even on the dollar index. And then traders, lastly, do want to take a look at crude oil. Crude oil, pretty dramatic move today, up about $1.38 per barrel, well above that $44 mark that it traded to, and even the $42 mark that came in as the lows middle of last month. And we can see that the market really surged today, closing at 45.78. In terms of direct resistance in the market, I am going to peg that at $47 per barrel. And you can see that we do have historical data that backs up this as an area of resistance. So traders, once again, it is the intraday low in both gold and silver that we really need to focus upon. What interests me the most about the activity over the last couple of days is that sellers had the ability to really push this market and push it hard to the downside, challenging that $1,200 mark. Remember, we've come as close as $1,204, but then buyers seeing the market as really undervalued and bidding it up and bidding it back up into positive territory. It is not only the fact that the sellers were able to move the market down, but most importantly, that buyers were able to bid the market back up. We have had effectively what is known as a doji or a hammer over the last couple of trading days. Both candlesticks represent consolidation and the potential for a key reversal. It is certainly not the time in which I'm looking to initiate a long position. We haven't gotten that pure V trajectory yet. In other words, that key reversal. But if we are to get a key reversal, this is exactly the kind of market scenario we would expect to find. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.